Hello everyone, and welcome to the PinchuTV Philippine Market Wrap. This podcast is for general information and market commentary only. It is not financial advice, and it does not recommend buying or selling any stock. Please make your own investment decisions. On June 11th, 2026, the Philippine market fell again. Just before the long weekend of Independence Day, today we'll first look back at how the market did that day. Then we'll answer the simple question: why does news from the Middle East move Philippine stocks? And later, in our future, we will cover a different kind of story. The Philippine Stock Exchange has become the first stock exchange in the world in joining CDP. It's not about today's price moves. It's about building the foundation's market. A quick look at June 11th. The PSEi, the main Philippine stock index, fell by 31.33 points over 0.53%. It closed at 5,910.06. That pulls it a little farther away from the 6,000 marks it has been near just the day before. Here are the numbers in brief. The all-share index fell 0.44% to 3,289.95. There were 75 gainers, 95 losers, and 59 unchanged. So sellers were in control. Turnover was about 6.65 billion pesos across around 77,000 trades, with volume was about 585 million shares. With the holiday coming up, few investors wanted to take the risk and trading was little quiet. Why Middle East news moves Philippine stocks? The biggest reason for the drop was rising tension in Iran. Louis Remington of Regina Capital said continued attacks to raising fear hurt market mood and pushed the index down. So let's answer a simple question. Why does tension in the Middle East reach all the way to Philippine shares? The key is oil. The Middle East is one of the world's biggest oil region. The Middle East is one of the biggest in oil region, and one route in particular, the Straits of Hormuz, carries about one-fifth of all the oil shipped by sea. When the risk of travel on that route goes up, even if no oil has actually stopped flowing, markets add a risk premium. In other words, a little extra just in case on top of the oil price. Iran is a major oil producer. It pumps more than 3 million barrels a day, so what happened there matters for the whole world of oil supply. That's why news from the Middle East reach an importer like the Philippines so quickly, even though it's far from the oil, higher oil and imported inflation. The second weight of the market was that higher oil itself. Oil, measured by WTI, stayed high at around 105 US dollars a barrel. Limringham also said higher oil prices worry about inflation and about a slowly economy. This matters a lot of the Philippines. The country buys a lot of abroad, fuel, energy, food, and factory goods. So when oils go up, or when pesos getting weaker, the cost of imports rises. That can bring what we call imported inflation. When fuel costs more, over time it pushed up transport costs, electricity bill, and food prices. In the end, households feel the squeeze and people spend less. So right now, the market faces a tough mix of importing country, higher oil, plus weaker pesos. The peso steady, but watch it. On this day, the peso was actually calm. It closed at 61.35 US dollar. The day before, it was 61.39. During the day, it moved between 61.17 and 61.43, with an average 61.32. For the past few weeks, our weak peso has been a drag in the market. This day was just a pause. Still, for a country that depends on oil imports, the direction of the peso affects both inflation and company profits. So it says one of the most important things to watch. Sector and stocks. Only two sectors finished higher. Service rose 0.44%, holding up well even with higher oil. Mining and oil was just very positive, up 0.01%. On the other hand, financials and the bank lenders fell 1.39%, the biggest drop. Property fell 1.04%. Holding firms fell 0.76%, and industrial fell 0.35%. With talk of possible rate hikes, stock tied to interest rates and local spending were sold the most. Among single stocks, the big failure were URC, Universal Arena, down 5.25%, the day's biggest drop. Among the banks, BDO fell 3.57% and Metrobank fell 1.56%. In property, Ireland fell 3.48%. The power grid company Synergy Grid fell 2.32%. On the other hand, one of the few gainers was ICT, the container terminal company, up 0.67%. It was also the most actively traded stock of the day. IR Corporation rose a little, and Meralco, the power company, was flat. So the more defensive power and infrastructure names held better. In a short, stocks tied interest rate and local spending were sold, while infrastructure and defensive names held up. A day that showed a cautious risk-off mood. The BSP's hard choice. Mr. Rimringan also pointed out that inflation worries for the higher oil could push the BSP, the central bank of the Philippines, to raise interest rate. And here is a hard choice, the kind that emerging markets often face. Normally, when the economy slows, a central bank cuts rates to help it. But when high oil keeps inflation up, it's hard to cut. Cut rate and you might push inflation higher. Rise rate and you might slow the economy even more. When slow growth and high inflation come together, we call it stagflation, and it puts the central bank in the real bind. That's why the market is watching the PSP wars even more closely than usual. Future. PSE becomes the first exchange to join CDP. Now our future. This weekend there was one more story worth noting. The Philippine Stock Exchange has become the first stock exchange in the world to join CDP. So first, what is CDP? CDP used to be called the Carbon Disclosure Project. It runs the world's only independent system for companies to report the impact of the environment. In 2025, 22,100 companies reported through CDP. Together, that's 2/3 of the world's total stock market value. By joining the Philippine Stock Exchange, now stands with more than 540 financial groups around the world. Together they manage over the 110 trillion US dollar, and they ask companies everywhere to share the environmental data. The head of the exchange, Raymond Monzon, said, in short, that the job of the stock market is more than just matching buyers and sellers. Being open about the environment, he said, is a key to long-term value. So what changes practice? CDP system is built on the global standard for climate reporting called IFRS S2. It also follows a well-known TCFD guidance, and it lines up at risk impact with Europe rules called ESRS and with natural forces one called TNFD. Its questions cover climate change, water, forest, plastic, and the oceans. In simple terms, this means two things. One, for listed company, there is now shared common way to find and report their climate risk and opportunities. Two, for investors, it is easier to compare what company is doing, so sustainability moves from just a slogan toward something you can actually use when you invest. This won't move stock price tomorrow, but over the long run, it helps build a more open, more trusted market. 3 takeaways. To wrap up, here are the 3 quick takeaways. 1. The PSEi fell again before the holiday, with Iran tension and higher oil weighing on it. 2. For an importing country like the Philippines, higher oil hits hard in two sides, inflation and monetary policy, and the central bank faces a stagflation style bind. 3. Apart from short-term risk, the exchange world first CDP membership is a real step forward to sustainability. Honestly, the market was felt nervous for a while now. On this day, Jollibee or JFC, which I own myself, slipped a little. The IR group names Ireland or Corp were mixed. Meanwhile, telecom, power, infrastructure names held up a bit better. One thing this reminds me of this. Being a fast-growing country does not always mean a strong stock market. In emerging markets, the currency, inflation, foreign money flows, and geopolitics can move stock in a big way. But at the same time, a move like this CDP membership, building openness and trust, is quiet, steady progress. Watching both the short-term swing and the long-term slow building its foundation may be exactly what the market needs right now. A quick note on Friday, June 12th, the market was closed for Independence Day. Looking ahead, the key things to watch are the BSP's policy, the situation in Iran, oil prices, the peso, the strong US dollar, and the inflation data. The market will likely stay very sensitive to news from around the world and to the central bank signals. In the short term, we may keep seeing the bumpy, volatile market. That is for today. Thank you for listening and see you next time on the Philippine Market Wrap. Salamat kayo. Amping.